Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Life is what happens while you're busy refreshing something that isn't going to change. Hindsight is perfect. Foresight comes with a subscription fee. Every plan works beautifully until it meets another human being. Diversification is owning things you don't understand in different sectors. Some cause happiness wherever they go, others whenever they go.
From pipelines to ports, this map is basically a checklist of global energy vulnerability. Nearly 40 plus critical sites across the Middle East have taken hits, and markets are responding like someone just unplugged the world's fuel supply. This is not just about lost barrels, it's about where they are lost. The Persian Gulf isn't just another region, it's the artery for 20% of global oil flows. Damage here doesn't trickle, it shocks. Prices are already flirting with triple digits, and the real risk is in today's disruption is repeat strikes. Energy infra has quietly become the new frontline. Oil grabs headlines, but sulfur is a silent kingmaker here. Nearly half the world's sulfur, critical for phosphates fertilizers, flows through a conflict zone. Disrupt that and you're not just hitting energy, you're squeezing global food production. Right now, inventories are cushioning the blow. But once reserves run dry, supply chain effects don't rise, they compound. Fertilizer prices spike, farmers cut usage, yields drop, and suddenly inflation isn't about fuel, it's about food. And here's the kicker. This hits with a lag. By the time markets panic, crops are already planted or not. Because in economics, shortages don't shout early, they whisper. Then show up on your grocery bill. Markets are not waiting for the Fed, they are front-running it. The 2-year yield jumping above the policy rate is basically the bond market saying, we don't believe you anymore. This is not a normal move, it's a credibility check. Either inflation risks are being underpriced by the Fed or the markets think rates need to stay higher for longer, possibly both. Layer in geopolitics and supply shocks, and suddenly bonds aren't pricing a soft landing, they're pricing stubborn inflation with a side of uncertainty. When short-term yields lead the Fed, policy isn't driving markets anymore, markets are dragging policy behind them. Because in fixed income, the smartest guy in the room does not speak, it reprices. Not all bad loans are created equal, and right now, retail stress is picking favorites. Axis is seeing a sharp jump in GNPAs, while HDFC and ICICI are quietly cleaning up their books. Public sector banks, interestingly, are showing sharper declines, suggesting recoveries, write-offs, or just better seasoning of older stress. But don't celebrate yet. Retail credit is a lagging indicator. What you're seeing now is yesterday's easy money coming due. And with rates still elevated, the pressure isn't done, it's just getting started. Geopolitics is heating up, but Indian money isn't getting cold feet yet. The UAE still pulls in about 7% of outbound investment, with flows surprisingly resilient despite rising tensions. But look closer, this is not a conviction trade, it's a cautious one. ODI is tapering at the margin, and much of the push is coming from mid-sized firms, not the heavy hitters. Translation, capital hasn't fled, but is definitely looking over its shoulder. If the conflict escalates, this could flip fast, because cross-border capital does not wait for clarity, it prices in risk in advance, and exits even faster. This isn't just about beating targets, it's lapping them. Apple overshooting its PLI commitment by 80% tells you one thing. India isn't a backup plan anymore, it's becoming a core manufacturing hub. A quarter of global iPhones now come from India, driven by exports and a clear China plus one pivot. But here's the catch. Assembly is booming, value addition not quite yet. The real win comes if India moves up the chain, from screwing parts together to actually making them. That's where margins, jobs and strategic leverage live. For now, Apple's success is India's proof of concept. The next phase, turning scale into depth.